welcome to the Market Rag for Monday, January 14th, 2008. Put a real nice day in. Most of it happened in the morning, kind of chopped around this afternoon, but ended up keeping these numbers pretty strong today. Up over 1% for all your major indexes, 1.5 for the NASDAQ that was real nice. That basically equates to about 170 Dow points. So a really nice move looking at it from this aspect. We'll keep this in mind when we take a look at the chart. Coming down here, oil had a big move up. Everything else pretty decent moves up except for the bonds. Didn't quite enjoy the party. As we hit the market sentiment grid here, as you can see, like I said last week, a lot of these weekly trends are now down. Just barely, but still down. A lot of yellow mixed in, and you'll see this red moving more towards the center of the grid, which means it's happening on a little longer term basis. We did have some nice bounces here. When we come over to a chart of the S&P 500, remember that inside day concept. That's where we fail to make a new high and we fail to make a new low, putting this day's range totally inside the previous bar. Now, even though we were up really good today, up 170 Dow points, with that ending up as an inside day, I don't think I can read too much into it. Still expecting a little bit of chop around this area, and would like to find a nice setup right here between these two moving averages before I get too aggressive on the short side. The dollar took another hit, so we popped up here on the euro. We're slowly approaching this previous high area. Now this is real sideways and choppy right now. If we can get above that, we may continue our trend on the weekly basis to the upside. Oil still battling right by its previous all-time high area. Nice pullback to resistance. Gold continuing its tear up since this sideways action. And the bond's looking pretty strong here, right back by this prior high here. As we jump over to the sector action, not a lot of clear-cut colors here. The ones that are up on a weekly basis are energy, which is probably looking like one of the best ones, along with consumer staples and utility. Healthcare, which is flat on a weekly basis, is starting to show some spunk right below resistance. Semiconductors taking a little break here after their big crash. One of your better looking areas out there remains to be energy here. We've still got an uptrend, not a great relationship between these prior two lows though, so the advance up to this high could take a minute. Industrials chopping around right here below this resistance line, as well as technology. If technology could stay right near this line here and get closer to the moving averages, we could have some great short setups in this area. Here's healthcare right back to the old resistance line. Now it gave us this fake move a couple weeks ago, but we've rebounded back to it. If I can get above here, this could be probably one of the better areas to long along with energy. Coming over to the portfolio, we got stopped out on a couple longs that we had taken for a hit of about 2R. Looks like right now not too much action in our portfolio. We've got one short and one long. The short we took a while ago and that's not doing all that great, and you can see that by us being down about a half an R on that. As I kind of look this over, I'm going to go ahead and give this market rating a 0. My concern is that we're going to have a lot of chop right near this area, and I'd hate to get tricked into anything. So I'm going to use a lot of safe entries here for a minute, and what that basically means to you guys is less shares. The portfolio rating, we're going to keep that at a 1. We're still above our moving averages and everything, even after the little hit we took. Just want to play it here on the safe side for a second until we can get out of this little area. You guys enjoy your evening.